Good morning, traders. Matt Weller here, Global Head of Research with FOREX.com. Today is Tuesday, the 18th of August, 2026, and in today's video, I'll break down everything that you need to know ahead of today's US session. Let's get right into it. So the major theme driving markets today and over the last couple of weeks, though it's certainly accelerating as we speak, is the meltdown in global bond markets. Looking at the world's largest bond market, the US, longer-term bonds are all hitting multi-year or in some cases multi-decade highs. Specifically looking at the 30-year US Treasury yield, that's at about 5.33% as I speak to you, the highest level it's been at in the last 12 years. But I want to emphasize this is not just a US specific development. We see multi-decade highs in the long-term yields in Germany, France, the UK, Japan, Canada, really across the board here. We're seeing a broad-based sell-off in bonds that's driving yields higher. The catalysts are many, if you will. Certainly the rise in oil prices is raising inflation fears for the future. That's something that has been an ongoing theme, especially over the last 4 or 5 months or so. Something that perhaps people have been concerned about for decades. Fiscal concerns, deficits, debts are at record levels in many of these countries. That could be weighing. And we also have concerns about crowding out from long-term AI funding. Essentially, there's only so much investment to go around. And if these major AI hyperscalers are taking out long-term debt, that perhaps leaves a little bit less for major governments. And across the board here, these different factors are combining to drive yields higher. And what that means for us as traders is that bonds are perhaps a more compelling alternative relative to stocks. We can see the NASDAQ 100, for example, is falling 1% ahead of the US Open. It's also something that could exacerbate some of those long-term fiscal concerns. So it's a key storyline to watch moving forward. And it's not something that's likely to boil over today or this week or this month, but it's certainly something you'll want to be monitoring and I'll be checking in on as we move forward. In terms of economic data, we didn't have too much significant today. We had the UK jobs report, which came in a bit cooler than expected, fewer jobs created than anticipated. The unemployment rate, which was expected to drop to 4.8%, instead held steady at 4.9%. And we've also seen job vacancies fall to their lowest level since COVID, and taking out COVID as kind of a one-off event, it's actually the lowest level we've seen for UK job vacancies since 2014. So a bit of concerning economic data out of the UK that may slightly reduce the pressure on the Bank of England to raise interest rates moving forward. Today's chart of the day is the US dollar versus the Japanese yen, and I've overlaid a chart of the 30-year US Treasury yield. Generally speaking, these are going to be positively correlated as US yields rise. That could pull dollar yen higher, but we have this wrench in the works of ongoing intervention from Japanese authorities and more recently the US as well. Nonetheless, here, as long as these yields keep ratcheting higher, that's going to put upward pressure on dollar yen and start to put more pressure on the Ministry of Finance and perhaps the US Treasury as well to intervene yet again. For my perspective here, I'll be watching around the 160.50 level. I don't think we're necessarily in a range where major financial authorities are looking to intervene yet again, but it does show that these intervention episodes tend to be band-aid fixes. They're not something that changes the underlying dynamics, which are weighing on the Japanese economy and weighing on the Japanese yen. So from my perspective, I think there's potential for more upside in the short term here in dollar yen, but if we break above, say, 160.50, a key technical level, that's where the concern of another round of intervention will rise. That is today's video. Thank you for carving a couple minutes out of your day to watch. If I can ask just one quick favor though before you go, please do drop a like on this video. It's a free way to show your support that helps us with the algorithms. And if you're not already, please do subscribe to our YouTube channel at FOREX.com for more videos like this. Thanks again and best of luck with your trading today.